So how do I think that the FP&A can actually protect the company? So if we looked at the three issues before, a lot of them came from time. If you'd had a better view about what was going to happen, it would be more likely you'd be able to take steps to deal with it. So early warning. And this goes into what you should be looking at to forecast. And I always think of the two C's. So firstly, covenants. If your business has debt, you've probably got covenants in your business. And I think the question is, we tend not to think about them if everything's going okay. But actually, if you breach a covenant, suddenly your lender has a much bigger say in the affairs of your business. And that can be something really major, like they actually may be able to take control of your assets. Or it might be something as simple, but probably even more annoying, that they may have reporting covenants. And so suddenly you are going to be expected to do more reporting work just to keep the lenders happy. And I've been in companies, and there is a massive rolling of the eyes when suddenly they hear they need to do more work around this. The other thing about covenant reporting is that it goes back to the macroeconomic factors. When you took out your debt, whenever that came out, interest rates were much, much lower than now. So suddenly your interest cover ratios are probably very close to being breached if they were fine before because of that massive change. So you're actually having a fresh perspective on that is helpful. Obviously, the big thing is cash, right? Now, don't need to say EBITDA and cash are very, very different things. And a lot of the time when companies can't pay their debts, it's because they don't have enough cash at the time. And I presume, do any of you forecast your cash? Oh, 1, 2, 3 grand. That's awesome. I think a lot about this presentation, by the way, is about forecasting cash. Please forecast cash. And a lot of people, when you do it, will go, and I was pitching on a project yesterday where the bank wanted to know what had happened to this business's cash. And so what we were thinking about doing is going, okay, we're not going to get all the bank statements. We'll probably just look at a P&L and balance sheet and look at a few of those and try and make an indirect cash flow. And that's fine, but actually, you probably need a bit more of an understanding and a bit more of a granular level. So what we tend to do, and even when we go out on projects, on turnarounds, we tend to do something which we call a short-term cash flow forecast. And it may look like a lot of work, but you can pay Teneo to make it for you. Or you can do it yourself. But what it does here is a very different view. You're suddenly looking at your business, not from an accounting perspective, but actually from an operational perspective. Receipts, payments, simple. I spent quite a long time also a few years ago in Scunthorpe. If you've been to Scunthorpe, it's an interesting place. It's got one massive, massive factory for British Steel, and we were looking at cash flow forecasting there. And when you're doing this, you're starting to look at different parts of the business. Where are your operating receipts coming from? It could be your sales forecast. But if you're looking at this is a 13-week period. This isn't very long. In the 13 weeks, you're probably going to be more focused on unwinding your debtors ledger. Now, that might not be something you do. That might be another team in your business. So suddenly, from being just an FP&A person looking at your own role, you're suddenly liaising with other teams in the business, and I think that's really helpful to make them feel more joined up and for you to have a better understanding of what's going on. If you want to really know what the operating receipts in the business are for the next 4 weeks, you probably need to take a long, hard look of your key customers and how much they're likely to pay you and when. Similar approach on creditors' payments. I think there at least you have more power because you can choose to delay payments. And then obviously the key things like that, payroll, rent, these are really, really big numbers impacting your business. And again, if you're thinking, you may be thinking all your forecasting is done over a period of years. But if you stop and think of the examples I spoke about before, the Singaporean company that had 3 weeks to pay wages, Agricole, which suddenly needed 300 million. 13 weeks, having 13 weeks visibility seems pretty good. So this cash flow forecast, as I say, it's something we tend to do in situations of distress. And maybe in your businesses, you don't need to because hopefully you're doing a lot better. But it is probably something to get into a habit of doing. We went into a FTSE 250 company end of last year. And actually we put a process in because we needed to do this quite quickly to help the company just understand where its cash was going to be. It was looking close to breaching covenants. And to their credit, they still do this now because they find it a really useful way of looking at things. There are real benefits here. One, if you're just having a look at your debtors ledger, you can hopefully find ways to generate cash quicker and find ways to save funds. Being able to release more cash into the business from your working capital is really, really important. Some of the work I do is around working capital optimization, which is really turning your stock debtors creditors into cash quicker. I think that cash forecast is actually a nice, useful way to do it. Probably the big thing is this avoiding surprises, planning for the future funding needs. I think that's really, really useful. But the other points around stakeholder management and better decision-making are helpful to me because if you do think there is an issue or if you want to flag something, this is a fairly objective piece of analysis that you're doing. It's not an opinion, there's numbers there. And a lot of the time when we work with companies in distress, we actually will see that there may well be a pinch point in, say, I don't know, week 8. And then you can suddenly start moving your cash around a little bit easier to try and find ways to actually go and overcome that hurdle. Going back to covenants, I think, as I said before, it's really important to look at your covenants, and it's really important to also forecast them. Again, it's, if you're just reporting on your covenants and it's a retrospective exercise, it doesn't really help with dealing with the issues that could be coming to your company going forward into the future. And so actually knowing what your covenants are, when do they need to be reported by, actually having a forecast that ties to your cash flow is quite helpful. For those of you here yesterday, the chap was discussing about data analytics with his law firm where he couldn't get the occupancy data and the headcount data to necessarily align immediately. I think it's just a reminder, even when you look at your cash flow forecast, doesn't make sense with the rest of what your business is doing, doesn't make sense with your covenant forecasting. And probably the big thing is if you do suspect there's a problem, actually do something about it. I'm very, very, very sure that the people in Agricor knew there was a massive funding requirement coming ahead, and they probably should have acted a little bit sooner. So I think being proactive, speaking to lenders is really, really, really useful. So if you think about what I've said so far, a lot of it has been around early warning, and where I see FP&A is as the sort of the heroes, if you like, who can hopefully see this coming before anyone else. But then the next bit is obviously warning people, crafting that narrative, and then actually taking the steps to do something about it. Now, as I say, just being able to produce the numbers is quite useful. But I think sometimes you can look also at further help. So with the legal points from before, if you think there's an issue, speak to your legal teams. You should hopefully have an in-house lawyer. Should keep them busier than what they probably are. So I think definitely engaging with your legal team is important. And also, if you can find some sort of independent advice, even if it's someone in your business who's maybe not quite as connected, sometimes having that independence really helps to provide a view about what's going on. A lot of those situations are highlighted before where companies where maybe if there had been someone independent, they would have immediately gone, what the hell are you doing? So I think having an independent advice is useful, and also being able to look at potential options. So I've spoken about working capital optimization to release cash. A lot of the time you can also get things such as CVAs. So they were quite popular about a year or so ago in retail. It's a mechanism in which you can negotiate with a creditor class in one go, and a lot of retailers use that to compromise on their landlord debts. So they were reducing their rents, basically. And then you get things such as CVAs, schemes of arrangement, restructuring plans. These are more complex, they court-sanctioned procedures. But basically what they do is sort of right-size the debt through a whole series of negotiations. Obviously, these are pretty hardcore things to do. But even doing things like maybe we need an equity injection, I think it's really, really helpful. One other thing that comes up quite a lot is when a business is maybe looking like it's in distress, having stakeholders is really, really critical and getting them on side. So be it speaking to people, HMRC, very, very important to speak to HMRC, speaking to your lenders, speaking to your shareholders, giving that bit of time. And finally, also looking and making sure that the director's duties are being met. Ultimately, the main takeaway for all this is that if you give yourself time, you're helping with preserving and protecting the business. So in closing, I just want to remind you all that FP&A is really, really important, and that I do think that you're the guardians of the company and that you do have the ability to make change and protect your business.